with almost 2.5 million smart contracts deployed on the chain, and a grand total of 123 plus million transactions since the testnet started. Quite honestly, it's remarkable to see these numbers and have them just tick up every single day. You guys are using and exploring the network. And so, yeah, take a look at the Nexus. It's nexus.mavryk.org. You could find it on our website as well. And there's a lot more coming to this Nexus. It is the touch point for all things of the Mavryk ecosystem in general. So if you want to interact with the treasury, you want to interact with domains, interact with governance, interact with the dApp store, the Explorer, it's all here. And with that, we're super excited to tell you that our TGE and mainnet, not just the token, but mainnet, is coming up on September 18th with MEXC, and we've got some more news to come on other exchanges, so stay tuned. So now let's dive into Mavryk. So you Mavericks out there have everything you need to know about the project before launch. So we're gonna start with, the most exciting news, as everybody always loves to talk about, is the multi-bank MAG deal. And the reason why this is such an interesting thing is that effectively it's one of the largest, at the time it was largest tokenized RWA deal to date. It still is, I believe, actually. If you look at Avalanche's tokenization deal in New Jersey, it's like an on-chain recording. So we're effectively set. We've got a $3 billion deal to tokenize MAG's assets on Multibank's RWA platform, which is built on Mavryk. That deal is set to scale to $10 billion with a Fireblocks integration. So when you're using the Multibank RWA app, you've got all of the security of a centralized exchange, all of the usability of a centralized exchange, all the security of a non-custodial wallet, as it's got an embedded MPC wallet in the background. It's the user is completely unaware, in a sense, that they're doing everything on chain. So as I like to say it, the multi-bank RWA platform will be the best sex you've ever had. Yeah, okay, getting a grin from production. Anyways, now, so to show you that, so as you've seen, Hacker News, it's kind of been all over the place, setting the stage for 10 billion in tokenized RWAs in real estate with Fireblocks custody. We have a lot to roll out about this, both from the MAG side, our future deal flow side, and also the multi-bank platform side. So stay tuned as it comes up after mainnet, of course, because of course the platform has to go live on mainnet. So with that being said, we've got the TGE and mainnet coming up. You could run a validator and earn extra rewards on top of your Mavryk tokens. You stake your tokens in order to run a validator node. You can also delegate your tokens to a validator if you don't want to do it yourself. You might have to, you don't want to, go to the hassle of running a cloud server or bare metal at home or whatever it is. You can delegate your tokens to a validator. He will validate on your behalf and you get paid. But you can also effectively stake your tokens, co-stake your tokens to the validator, because the validator has his own bond, a security deposit, and you can stake your tokens to that security deposit without having to actually put your tokens at any form of custodial risk with the validator. So that's really cool. You should check it out. You can either become a validator yourself, stake your Mavryk yourself. We've got a foundation delegation program. There's so much. We can do an entire episode just on this, but I'm going to leave it for now with you guys here. Now, and well, the big news coming in the weeks and months, I think my team's trying to get me to drop alpha, but we're not allowed to talk about it because, a little thing called NDAs, which some fundsters seem to not realize are a thing, almost as if they haven't signed anything in their lives. But to give you a little bit of a high level of what we built, to start off, in the total RWA ecosystem that we've built, we think of it as a full stack, holistic approach to launching an RWA ecosystem. And that starts with, obviously the token standard that facilitates the tokenization of assets. So we built the MRC30 token standard. It comes with embedded or non-embedded KYC, depending on the regulatory regime you're using. So for example, in the UAE, there's DLD regs, there's VARA regs, there's different things, and you need to be able to have the framework for tokenization. With that, we've also created 4 different RWA launchpads, or DEXs, I should say. One of them is the launchpad. That's used for the primary offering, the first time an asset is sold to public. And then we've got 3 different RWA DEXs for secondary markets, which is namely the proactive market maker, an AMM, PMM, depending on your definition, function similar to Uniswap in a more advanced way for RWAs. Then we've got an on-chain order book DEX, which is the advanced trade function, as you see in equities, and OTC markets for large block investor-to-investor orders. And oh, actually, I think I was supposed to dive into that there. Let's get rid of that. And that brings us to equities. Equities is our infra for running all of our RWA deal flow on. It is the underlying infrastructure for the multi-bank RWA platform. And you'll be able to go in and effectively buy RWAs that provide yields directly to your wallet. So let's dive into equities for just a little bit. Let's go. You'll be able to scroll through, see how ownership reimagined. If you got 50 bucks, if you got 100 bucks, you can go in there and buy a real asset. You're not buying a meme coin. You're going to get paid dividends. You can read all the prospectus on what the offering is and what it has to, the benefits involved, the capital appreciation, the dividends to your wallets. You want to go buy a new phone, you can liquidate. You want to go borrow against it, you can with Maven. We'll get to that in a minute as well. So if you go through and then you can go into the marketplace, view different types of properties. So these are testnet assets, so you can go in and explore and play with it and actually get some testnet USDT and buy and trade and sell these assets on chain. So over here, you've got North Texas Bitcoin miners. That's a Bitcoin mining facility that we're looking to tokenize. And it's really quite interesting, is because with a Bitcoin miner, everybody's looking for how to get Bitcoin dividends or Bitcoin yield. And so far it's been a load of malarkey. But if you look at owning a Bitcoin mine, there's some that are public, but they don't pay out dividends in Bitcoin. So if you want to earn dividends in Bitcoin, you can buy an RWA of a Bitcoin mine and then get, Bitcoin dividends or wrapped Bitcoin dividends in an automated fashion on Mavryk. We're also got a series of apartments, there's condos, resorts, home loan deposits. It's a really interesting one because was just talking about the Big Short last night, but at least now it's all on chain. But it's almost like mortgage-backed RWA tokens and real estate-backed RWA tokens. And then, of course, things like the Queen Tower, which is mixed-use real estate. This is really ripe for tokenization because you effectively have, it's like single asset REITs. Pretty cool. If you dive in and go into one of the assets, you could see, you've got tags for like mixed-use real estate, secondary market. It's located in the UAE. This is, of course, a testnet asset. You can save, share it, look at all the photos, see how many rooms there are, how many square feet, the occupancy rate, when it was built, all the different details about the asset. So you can make a decision. At the end of the day, just because the asset is on chain doesn't make it necessarily a good asset. You always have to do due diligence. And so that's what we've built into equities so that you can always have clarity on what you're buying. So you could look into the financials, see your net rent, the total investment that was put into it, expected incomes per token, et cetera, et cetera. Of course, you can go in and see the blockchain data. Make that a little bigger for you guys. You can go in and see the blockchain data and see that the on-chain identifier is the Queen Gambit. There's 1,817 tokens issued by equities, the issuer address on-chain, and then, of course, as they are RWA tokens, the admin addresses and the asset ID. So you'll be able to take this and actually check it in the Nexus. Speaking of that, I'll actually, then you can also go into the offering. So then see like, okay, the minimum investment amount, max investment amount raised, offer percentage. There's all these different things, your due diligence side of things in terms of a prospectus, paperwork, all that kind of stuff that, the terms and conditions no one ever reads, but they have to be there. It's going to be here. And it's important. It's important that it's there. And of course, transparency is the name of the game, especially transparency and access when it comes to RWAs. So not only should you have access to investments around the world, but you should also have clarity and transparency into what they are. And then of course, trading history, you want to know, is your asset going up, your asset going down? What's it trading at? Did someone get divorced and dump their tokens and you can pick them up on the cheap? Or maybe someone bought up fat fingered and went up too much and you could sell? You can see the trading history of the asset. On the right-hand side, you'll see that this is currently plugged into the AMM in the background, and you can see that tokens at $141. There's these are testnet numbers, so don't take these quite literally. But there's a total return on dividends On the capital appreciation, you could see the expected income, the amount of investors that own this token, so that's wallets holding the token, the total liquidity that you guys bought up everything on testnet. Really, like, we have to mint more of these tokens just for testnet and get them in. They bought everything. It's 99.35% USDT in the pools. So, well, good job, guys, on buying up everything. But you can go in, say that you wanted to go buy, let's say, $100 worth of the token using stable coins. Click purchase, click continue, go through, accept all of the different, the terms and conditions that are there. Remember, these are assets that legally have obligations to you as an owner to pay. These are not meme coins, so it's we built this holistic system around it, but it's still things you need to sign. So that being said, you can go in and buy assets there. I think that's it for equities. You can go and play with it. It's live on testnet. Please do leave us feedback. Guys, go break it, or go attempt to break it. We've got some pretty good devs, but that's that. So now in a RWA ecosystem, it's not enough to just tokenize an asset. Everybody's like, hoopla, I can tokenize an asset. Great, you digitize the asset with extra steps. So what you really need to have is a secondary market, and so you can trade in and out of the asset, right? What if you missed it? What if you were like on vacation when the asset went live? Or you want to sell it later on. So you need a secondary market. And another thing that's really important for an RWA ecosystem is lending. And these three systems, that first initial sale to the public, the secondary markets, and lending, they all need to be composable. They all need to be interoperable with each other. So we've also built lending. We've been just a wee bit busy. So Maven Finance is our on-chain banking application for borrowing against your RWAs. You can borrow against your crypto on Mavryk. You can borrow against your RWAs on Mavryk. Down the line, actually, we've got architected already mortgages so that you can buy from the primary listing. You can put like $2,000 and buy $10,000 worth of assets. That's going to be coming in a future update to Maven. And let's dive into a little bit of what Maven really is. So like I said, Maven is a peer-to-peer lending bank. I don't like to call it necessarily like a dApp per se, because it's such an intricately built system that it's fully run by a board of directors called Satellites. We'll get to those. But effectively speaking, now we have $201 million of USDT on testnet. It's a testnet, fine, but there's 315,000 suppliers of USDT to the lending pools. There are, let's see, total borrowed is 14 million. There is 1.2 million active vaults on Maven. So each vault, which is effectively a loan, it's the smart contract that holds the assets. They're multi-collateral loans, vaults. So you can put in your condos, your Bitcoin miners, your Mavryk tokens to a degree, euros in there. You can put anything you want to in there, and then borrow against the combined value of your vaults. And everything is on chain. Everything is completely transparent. And you could actually view everything on a block explorer, but we also built the front ends for it, so you don't have to dive into the small details. Then I'm going to transition into the satellites. So if you could imagine, a satellite is like a board member that would be running a bank. So imagine if Maven doesn't have a CEO, it's got a decentralized board of directors. Each director is a satellite. Those satellites stake their Maven tokens and they vote on everything in Maven. So whether all the revenue that flows into the on-chain treasury on Maven, Maven has its own independent treasury from the Mavryk protocol treasury. There are yield farms, there's governance. Anybody can contribute new code to Maven and the satellites accept it and it rolls in as an update. They also sign the price feeds for a decentralized oracle. So that's really cool. We kind of took, we were inspired by Aave, inspired by Chainlink, inspired by a bunch of different blockchains with on-chain governance. And so we created a banking system that combined it all. So you could stake your tokens to a satellite, earn from their earnings, and they provide all of the price feeds for a decentralized oracle. So whether that's the North Texas Bitcoin miners over here, NTBM, the Queen Tower, Bitcoin, USDT, Mavryk to USD, the satellites sign those price feeds. It's basically decentralized Chainlink and lending like Aave with governance like Mavryk. So that being said, how do you access this all? So you would go to mavryk.org, go to the explore section, click on the wallet link. Let's get rid of this little headline there. and come in and you can explore the Mavryk wallet. You'll be able to store your RWAs in your Mavryk wallet, crypto, tokens, NFTs, anything that anybody builds on the chain will be accessible in Mavryk's wallet. We're going to have rollouts for a single sign-on type MPC-based accounts, so that you never need to worry. You can have your private browser wallet, non-custodial, but don't need to worry about your private keys. It's something that really is a blocker for some people to get into crypto, but we wanted to make it as easy as possible for everyone. And you'll see that on the multi-bank RWA platform, where you don't even have to deal with your private keys, but it's fully non-custodial as well. So
now we're going to go to questions.
Now we're going to go to questions.
Yeah. So
okay.
If anyone has questions in the community.
Yeah, we could do that. I mean, I've got tokenomics on the agenda, but yeah, I mean, we've published.
Oh, sorry, I'm here.
We've published the tokenomics. No, it's fine. It's fine. We can just, we published the tokenomics. Everybody has questions about the tokenomics. Happy to hear them. So, long story short, we've got the tokenomics are.
You're gonna have to share that screen if you want to share it.
No, I mean, this is well, we're gonna publish a very clean version of this. Some people thrive in organized chaos. I thrive in organized chaos, and I send everything to design, and then design makes it pretty so people don't rail us on Twitter. Yeah, so when it comes to the core team and contributors are 16%, foundations 18%. We're going to be running validators with those at the start. We've got our investor tokens at 20%. There's the public round that happened several months ago, the incentivized testnet as well, economic incentives, and the protocol. The main things I actually wanted to get to in the protocol treasury and liquidity mining are their allocation specifically, is the fact that is all going to the community. The protocol treasury is fully on chain. It is controlled by a 7-seat council. We're gonna have to do a whole dive on the protocol treasury and liquidity mining, but the protocol treasury council is elected on chain by the validators, and there's elections every 12 months, and then that protocol treasury council, controls the protocol treasury. The liquidity mining tokens also go into the protocol treasury and then are distributed monthly from the treasury council into the liquidity mining contract, and then the validators choose which projects. They vote on a percentage scale of which project they want to give tokens to. So projects can come in and say, you know what, I'm starting a new DEX on Mavryk. I want to give 5% of my tokens to the protocol treasury to incentivize validators and draw their votes to send my users Mavryk rewards. And then the validators earn those incentives, and the people that delegate and stake to the validators earn those incentives as well. So it's really quite an interesting system. We have 90 million tokens allocated for our validator program. We have a validator program kind of going on now, onboarding some of the biggest validators that are out there in the field. We will be announcing those one by one as we line up towards TGE. We've got another 2.5% included for ambassadors, another 2% for advisory, and 4% for liquidity. So if we have any specific questions, I think now we can go to questions would be a good time.
And I think it's also good to mention that we have published a summary of the tokenomics in Twitter, so people can see it's actually designed there. So,
yeah. So, I could have shown this while I was reading that. Let's see.
If you scroll down, keep going.
We're going to keep scrolling. Maybe our marketing team is really active. We need to talk to the intern and maybe get him off the Red Bull. Let's see.
Keep going.
Guys, we have published our tokenomics. I know, because so many people ask so many questions on Twitter, like you guys running to ask questions. Yeah.
Keep going. It's there.
We're almost there.
We're almost
there.
Let's keep going. It's coming.
There we go. Okay. So yeah, let's open this up so you guys can see it. And yeah, if there are any questions, please let us know. As I said, we took a blockchains as a nation state economy approach to things. It's important that you keep the FDV low, even despite, we've had some instances where we announced our deal with multi-bank and Mavryk, and people literally decided that they wanted to double our fees, with some of them saying that we need to raise our budgets because of our deal and just trying to charge us more for things. But we think it's vitally important that you start at that the importance of an economy and a free market economy is that it is open for everyone to take part and open for everyone to benefit from. And so you're not going to find multi-billion-dollar valuations and then absolute dumps from private rounds. So
I think it was really interesting, the post that we had from that commenter. He broke down the actual event. Sorry, he actually looked at the tokenomics, broke it down, and then you replied back and showed all the corrections in it.
Oh, yeah.
But just talk about it. I think it's good.
Yeah, I mean, if there's any questions or anything from
Pre, you can jump and start sharing the questions on the screen. Go back to Riverside.
Okay.
And stop sharing.
How does Mavryk Equities leverage Fireblocks and Multibring to ensure secure, compliant, and scalable RWAs for investors? That is a... Oh, okay. Thank you. Long story short, the Fireblocks integration goes into the back end of Multibank's RWA platform, so that when you move money from your MBIO, multibank.io, that's the crypto exchange, when you move your money from your spot account in MBIO to your RWA account, you're actually now placing it from a SEX style wallet, a custodial wallet in the SEX, into a non-custodial MPC wallet that shards your private keys in the back end. So from a user perspective, you're just transferring from spot to RWA. And they have all the on-ramps for fiat into spot, and that's like obviously a given. And then you move your money from spot to spot to RWA, and then it sits in this non-custodial RWA platform. So you're actually using a non-custodial wallet, and the multi-bank RWA exchange leverages Mavryk's advanced trade function so that you can actually buy and sell and trade into these smart contract DEX directly from your wallet. Now you still see, look, and feel, and we'll do a live with the multi-bank crew soon, but it still looks and feels like a centralized exchange, but it's got all the security of a not only a decentralized exchange, but also Fireblocks' institutional MPC wallets.
Okay, next question, Pri.
Pri, if you could throw the next question on the screen. Will small investors be able to buy fractions of assets like the Ritz-Carlton, or mostly institutions? Is $50 the minimum? Right now, they're setting a $50 minimum on the primary listings of the assets, so that's the first time it goes live to market. $50 is unheard of, low for getting into investments. Crypto, of course, has blockchain has changed the scenes on that. The secondary markets are DEXs, and you can buy as little as you have in the wallet. I mean, you can buy with dust, theoretically speaking, if you'd like to. But for the primary offering, it's just starting at $50 a token. Or $50 minimum purchase is the better way to put it.
Okay, next question, I believe.
Mr. Alex, that's very formal. Thank you. How does Mavryk plan to drive long-term adoption and RWA's integration beyond? To infinity and beyond. Okay. How we're planning to drive that? Well, long story short, we've taken an approach of really, I used to work for a different blockchain foundation. The team has extensive experience in different blockchains and traditional markets, family offices. And what we really saw, well, there are multiple problems in the industry when it comes to RWA adoption, when it comes to layer one adoption. And namely, the name of the game is that we're too focused on just tech being the solution. And tech is seldomly the solution only on its own. It needs to have adoption that comes from a business development team. And so we've got a wide range of mix, and I'm not going to call him salt and pepper because I hope he's watching this, but of a senior business development team that leverages family office and private equity connections and experience to onboard asset managers and property developers, and then bring them on into our infrastructure on Mavryk. So we do have, we've got like our Mavryk Labs, Mavryk Dynamics, and that drives the adoption of tokenization on Mavryk. And there's one more thing on the driving adoption side of RWAs, but I will get to it when I remember. And so then next question.
Next question, Bray.
Any plans for a mobile adaptation that is for the Mavryk wallet? Yes, of course. I mean, the plan eventually is to do like a mobile application so that you can access everything in the Mavryk ecosystem on Mavryk. A multi-bank The multi-bank RWA platform will be inside multi-bank's application, accessible both in app and mobile version, and that has a Mavryk wallet in there as well. The RWA platform is non-custodial, so you could use that as your mobile wallet if you'd like to. And a mobile version of the Mavryk wallet for the entire ecosystem will be out sometime down the line. We've got a lot that we're doing in terms of the tokenization side and development. So priority-wise, use the multi-bank RWA platform for mobile and the Mavryk wallet for desktop.
Next question.
What are the steps needed to take and become a validator? So we're going to have a bunch of documentation that's posted about this. Lots already up, more is coming. And effectively speaking, token-wise, you need a minimum of 6,000 tokens to run a validator. You can take in a co-stake to increase your security deposit, the bond for the validator. And then from there, that actually increases the amount of delegations that you can receive. So you need to have your 6,000 tokens minimum. You can take in co-stake from other people, and then you can take in delegations as well. You can run it on a cloud server. You can run it on a mini computer at home, like a Raspberry Pi. They're actually really easy. It's not like running, it's not heavily based, it's not heavy infrastructure. So you can actually run one around the world. In fact, actually once I put one in a Tesla. I ran one in a Tesla Model 3 for a while. That was really cool, actually, to see it running on the screen. Next question. How many yappers are getting rewarded? That I'm going to have to ask marketing for. If we have a number, do we want to share a number?
Not yet.
Not yet.
Still calculating.
We're still calculating.
Next question.
Will there be a listing on other exchanges? I mean, yes, of course, but we announce them as we go along. We've got multiple offers that we're contending with, as you could imagine. I have a lot to say about this, but I will not. Next question. How is Mavryk making the process simple and accessible for everyday investors? I mean, the easiest thing, as I mentioned before, is that we've effectively made decentralized marketplaces integrated with centralized marketplaces so that it's you can transfer through multi-banks like fiat railways in like 150 something countries. You transfer fiat money in, you convert it over to USDT, and then you can just transfer it easily. I mean, it's a matter of clicks into the decentralized ecosystem that is the multi-bank RWA platform, and you can access everything from the MAG deal. And we've got a lot more coming. I can't tell you about it yet, but a lot more is coming on board there. But long story short, the way that we make it easy for everyday investors is you go into, you load up your wallet with some cash, some USDT, you buy an asset, and effectively the dividends are distributed directly to your wallet. So long story short, you can get just, monthly, quarterly, daily, whatever that asset's dividend distribution cycle is, will get paid directly to your wallet. So you sit back, buy some RWAs, leverage, borrow against them if you'd like to, and get paid directly. And even you can get paid directly into your vault. So it kind of works like your traditional, banking system in a sense, just all on chain, where you borrow against an asset that you own and you get dividends and use those dividends to pay down your monthly payment. Next question. What's the first milestone or outcome you hope to achieve right after launch? Well, that depends who you ask. There's a lot of things that everyone's saying and what they want to see after launch. Quite honestly, I just want to see a successful launch on day one and just make sure that we onboard as many validators as possible. I really am interested in seeing the staking and co-staking and what pops up for liquidity mining and the protocol treasury, because that is actually quite a different, most blockchains, actually I'm not sure if another blockchain has a protocol treasury on chain anymore. Arbitrum has one, but it's centrally controlled. And liquidity mining is usually done on a DApp level. So I'm really looking forward to seeing how that actually evolves, because our BD lineup, our BD roadmap is heavily set. We've got a lot of things to introduce as we go along. The things that I want to see a smooth rollout of mainnet. I want to see a smooth rollout of the multi-bank's RWA platform. So quite frankly, I'm really excited about it because I'm a prime customer for this. Managing real estate, managing assets is extremely exhausting, and I really just want to have a diversified portfolio and a wallet that pays me and not worry about a meme coin that may or may not have pumped and gone down and rugged me at some point, because it happens to all of us in that side of crypto. So I just want a on-chain reliable economy, and that I think is that first milestone. What other RWAs you're eyeing next, like stocks or gold? So stocks are an interesting one. You're starting to see like X stocks pop up on some other chains. There are plenty of on ramps for stocks. I really think that the low hanging fruit for tokenization is yield bearing private assets, so not publicly traded assets, but yield bearing private assets. Gold has something called a cost of carry, which means that it actually costs money to hold gold in a vault every year. You got to pay for security, you've got to pay for audits, you've got to, well, unless you're the Federal Reserve, you have to make sure the gold is there, unless you're the Federal Reserve. And so that gold, that has a cost to it, typically. So yield bearing assets, stuff like rental properties, things that go into real estate investment trusts, typically hotels are a great one because they come with extra perks if you tokenize them. Bitcoin miners is really something that I'm going to be excited for because you can literally earn Bitcoin. It's one of the only ways to earn Bitcoin without lending it, but just by owning a mine. So as the mine pumps out Bitcoin, you get the Bitcoin as dividends instead of cash. I think that's actually the really coolest thing about it. Next question. How does Mavryk address security vulnerabilities? Well, this is actually really interesting. All of our smart contracts are written in Lego, so it is a functional computing programming language. It is not Solidity, which is really actually, it was interesting when we were talking to property developers. Their biggest concern are security. They see hacks every single day in the crypto field, 100 million here, billion there, and quite frankly, we use a coding language that's more inherently secure. We've got audits going on from 2 different smart contract or security companies, I should say. We will publish those as soon as they are final. And like I said, we've integrated with the largest MPC institutional wallet provider. So, security is paramount. And this is actually where I was going with that. On when I was talking about property developers, I mean, some of these companies, like I have to, print, sign, and scan contracts to send back. So, like I said, when they're not web, these companies are not exactly, they're not even Web 2 yet. They're very traditional industries. We're not looking to bring Web 2 into Web 3 and all of the kind of fake hoopla that never made it out from 2021 to 2025 now. On the Web 2 side, we're looking at onboarding traditional financial systems that are still using pen and paper. So that's is a little offshoot tangent from security vulnerabilities, but it is obviously part of that business strategy. Is there any partnership with big chains before the listing? I would love for this person to ask another question, or at least answer mine. People keep asking me this. I don't exactly know how chains collaborate with one another. They are competing ecosystem. A rising tide does raise all ships, but chains typically do not collaborate together to that degree. So no. Now with big chains, no. Will Mavryk properties be switched to real world assets after mainnet? They are real world assets on mainnet. So I don't fully understand that.
I think let's go to the next one.
Yeah, let's go to the next
That
one.
needs more explanation.
Yeah, that question needs more
that would be
explanation.
great.
Are there any unique incentives for early adopters or contributors? As you know, we've got an incentivized testnet that's going on. There will be an airdrop for that. There's an airdrop as well for Kaido users, and we've got allocations set aside for tokens as well. So that's the economic incentives portion. That is there to provide economic incentives to users. And it's one of those things, a lot of people are like, let's just give away free tokens, give away free tokens, give away free tokens. And then you wonder why the token price collapsed. Well, you want to reward people that provide value in your ecosystem. And so we have a different series of plans laid out for those that allocation of economic reward tokens. In addition to that, again, like I've mentioned, there's the protocol treasury and liquidity mining. And quite frankly, that is the most decentralized way of having incentives for early adopters and contributors as well. Next question. How does Mavryk differentiate itself from other RWAs that are targeting RWA integration, sir? They're very formal today. Or also DJing. So there's a lot I can say about other RWA L1s, and I will keep my mouth shut unless you meet me at a bar. So, or on stage at a conference. So I like to get feisty and not exactly toe the yes sir line on panels. So long story short is that we have a lot of deal flow that we wanted to deliver to an ecosystem. We were thinking, okay, what's the best way to build a complete RWA economy? What's the best way to build interoperability between these they're effectively just digitized. In 5 years, we might not call them RWAs anymore. It's like when Napster came out, it was like, oh yeah, I downloaded this MP3. It's like, nah, not really. The MP3 is just the medium. You downloaded a song, and now we just call it, you bought a song, and it's digital. So when it comes to RWAs, this is where we are in the spectrum of RWA history. But long story short, we're simply digitizing and all our entire access to deal flow of real world properties and assets onto Mavryk's chain. So that's a wholly different approach. Like I said, we took a full stack approach to it. We've got the MRC30 token standard, we've got the launchpad for the first sale of the public, 3 different secondary markets, lending, borrowing, decentralized oracles, and mortgages will be coming out down the line as well. And so I'd like to think it as when other RWA platforms or layer ones call themselves an RWA L1, go out there, ask these questions. What deals do you have to bring RWAs out there? What infrastructure besides for the chain itself is there for RWAs? Is there an RWA token standard? Is there a secondary market? Is there lending? Are there mortgages? And I believe the only answer to that right now is Mavryk.
And is there a regulatory part?
There's a regulatory, is there a regulatory partner as well for issuing these tokens? The Virtual Asset Regulatory Authority here in Dubai has recently announced, it was about 6 weeks ago or so, something called the ARVA token standard, which is asset referencing virtual assets. It is basically a token who represents the value of some other asset, and that asset can be real estate, it can be a fiscal contract, it can be, it's an RWA token regulatory framework, not a token standard, but a regulatory framework standard. And that is something that we have a partner for with Multibank and are very close to regarding this matter. And Mr. Alex, sir, what's the biggest hurdle in scaling RWA adoption, and how is Mavryk uniquely positioned to solve it? It's not the tech guys, believe it or not, except for the fact that the people have siloed the tech in different places. That's easily solvable by bringing it all together, as I mentioned, with the full stack integration on Mavryk. But I think, honestly, I think it's getting people to understand that everything is siloed, right? So they don't understand why things don't work together, but someone built a square, someone built a circle, and they're like not plugging in. There's that in the crypto field. You've got the crypto side of building RWAs that knows all of crypto and the tech really well, but they don't know traditional business. And then you've got traditional business that knows everything about traditional assets, but they don't know much about tech. And remember, these guys, I've got guys who literally need help signing into Google when they are coming over and wanting to have meetings. So it's really the fusion between how do you get a extremely traditional conservative field to fuse with an extremely forward-thinking, bleeding-edge technology industry. And the answer to that is having, dedicated and experienced teams, some salt and pepper with interesting accents, referring to some of the team members here, who can help bridge the gap between those two wildly different industries who are at the very edge of crashing into each other as in the sense of, not in a bad crash, not sure if there's a good crash, there's not probably a better word for that, as they're meeting up with each other finally, right? So there's no more paper, pens, Excel sheets. There'll be Excel sheets, unfortunately. Everyone's got Excel sheets. They're terrible, or great, but terrible. What role Fireblocks integration play in scaling institutional adoption of Mavryk? If sovereign wealth funds and family offices and the big money that wants to come in and actually buy into these assets, BlackRock's been buying up assets left, right, and center. So they're not going to sit there and be like, oh, did I lose my private keys? Did I save this? Did I do that? No, they use institutions like Fireblocks. Fireblocks is the gateway to institutional access. They're probably patting themselves on the back as I say that right now. But yeah, that Fireblocks integration is definitely, it is crucial, because at the end of the day, it doesn't matter if you own something if you can't access it or someone steals it from you. So security is paramount. So Alex, how does Mavryk plan to maintain trust and compliance when scaling globally across different jurisdictions? I mean, the answer, that's kind of, wrapped up in everything I just said. I mean, for starters, look, my name's Alex Davis, born and raised Los Angeles, California, ex-chief innovation officer for the Tezos Blockchain's MENA office. The team is doxed. We are partnered with a massive behemoth of an exchange here in Dubai that has 17 regulatory licenses in and jurisdictions around the world. We are putting, I mean, almost everything that we can put on chain, we're effectively putting on chain. The vesting contracts will be on chain. I know someone was tweeting about that the other day, and I've answered that as well. But like all of that vesting, it's not legal vesting of, oh, well, the foundation holds it and drips it out every month, and then someone in the foundation rug pulls. No, it's not like that. We've got vesting contracts that are currently being audited, of course, and like I said, published when we go out. Everything, we built the Nexus as a touch point so that to a certain degree, you won't have to trust us. You'll trust the system, and that system is fully on chain. So, I hope that we convey trust to the community. But at some point, that whole trust but verify, that's exactly what we are living with here. And also another big thing is that checks and balances. Like I said, you've also got the protocol treasury and liquidity mining. There's elections from the validators to elect a treasury council. That is all on chain. We cannot affect that except for obviously the voting. And that's one of those things where it's like trust us, but also check us too. Can you explain the MRC30 token standard actually benefits users and developers? I'm assuming by developers here you mean code developers, but it gives them a framework in order to have a standard that effectively has all the metadata and transfer permissions that you would need for an RWA token. For users, it effectively means that you can hold an RWA token in your wallet in a non-custodial fashion without anybody else having access to your funds. I mean, there's always, you need to keep into account regulatory compliance measures. They are permissioned assets to a degree, but you don't have an FTX that's using your RWAs that are stored there to go and invest in other things. So that MRC30 token standard really sets this like a gold standard, no pun intended, for an RWA token that can work with different jurisdictional regulation and to be compliant, and also for the ability for you just to have a portfolio of assets in your wallet that pays you. I mean, I'm excited about that. How do you intend to keep price action healthy upon launch? Around 94% of tokens at launch seems crazy. I mean, they're vested and into different vesting contracts for different purposes. It's 5.6%, I believe, off the top of my head, for total liquid at launch. And then every month that also drips for different intended purposes. It's not, like every month the other 94% unvests and dumps. They're going to different things. Like, for example, 20% are going to the protocol treasury and liquidity mining, 90% are in validators, 99%, 90 million tokens are in validators. So that is going to, I mean, there are definitely blockchains that have launched with less than that liquid at launch, but you have to pay attention to the tokenomics, you have to pay attention to the economics of the system, you have to pay attention across the, I would call it, not even tokenomics, but the nation-state economic model that we're taking from here. I'll dive into this really quickly. I'm writing a thesis on blockchains as parallels to nation-states. You could look at it on my Twitter account. But long story short, most other blockchains operate like oligarchies, where all the money stays in the foundations and the team and the VCs, and then everybody dumps on retail. They go live at a $6 billion valuation, and then they go down and down and down as the team and VCs dump on public retail. With 100 million FTV, we're flipping that narrative to the other side, and instead of operating like Venezuela or Russia in that oligarch capacity, we're actually taking a look at the UAE, the United Arab Emirate economy, where they had they had oil revenue, but what they did is they invested in infrastructure, hospitality, tax incentives, and entertainment, and basically everyone wants to move here because life is great here. And so that drives more and more people to want to be here. And the local population and residents, they're not rich off oil payments. It's a very mistaken thing. The longtime residents have become affluent because so many people have moved here, and the sand has turned into billions of dollars of real estate. Real estate land has become billion, is the token of the UAE economy, and they've driven value to their economy, and they've driven value from a top-down approach of, or really like bottom-up approach of driving value to the economy, driving value to the ecosystem participants of that economy. So you have to pay attention to the sum is bigger than the outcome is bigger than the sum of all its parts. Butchering the line, but you get the point. Next question. What innovative features or upcoming developments on the Mavryk network are you most excited about, and how do you see them shaping the future of decentralized finance? I think the most incredible feature about it is the blend between the protocol treasury, liquidity mining, the DeFi apps, and lending, because we don't have on-chain mortgages yet. They're coming soon anywhere, right? And so what you're effectively going to end up happening is you're going to be opening up the entire world of financial applications, which is like reserved for effectively like the 1% of America even. And if you think about the global picture, you're looking at 0.1% of the world. So now everybody can actually access financial services that no one can access today. I mean, it is insanely difficult to get a mortgage even if you have the money. So by automating these systems, by making it permissionless, by giving it access to global investors around the world, I think the cool, like, I mean, now I feel like I'm at a Miss Universe pageant of, I want to make the world a better place. I think it's really exciting that that I myself am a customer for the products that we're building, and so that to me is an extremely exciting day when honestly I don't have to deal with any of the management when it comes to investments. I can just sit there and have a portfolio and think, okay, well, this place is getting risky. Let's de-risk from there. Let's go to somewhere else. Let's get an ETF that represents, I don't know, GCC hotels because the region is stabilizing, and we invest there. So I think the coolest thing, I mean, think about it this way. An ETF minter where you take RWA tokens and mash them together, put them in a vault, and then issue a token backed by the RWAs locked in that vault. I mean, we're going to enter an era. So I guess where I'm going with this is we're going to enter an era of what I like to call bespoke finance or personalized finance, where you can create your own ETFs and vaults, or other people can create ETFs and vaults that are highly specific and backed by transparent assets on chain. And I think where we're going in the next 5 to 10 years, if the Tesla Optimus robots, along with Boston Consulting, don't kill us all, it's going to be really cool.
Okay, we were meant to end now, but I think we're going to go for a bit longer, if that's okay with you.
Yeah, I mean, like, we should filter some of the questions for interesting ones, if that's possible.
Yeah, we are.
Yeah. Okay. Can you expand how equities can transform the way traditional assets are tokenized and traded? Well, to be fair, I mean, if you want to buy a fractional piece of real estate today, you can in America. There are some websites in different countries in the world, the UAE included, where you can buy fractionalized real estate. Unfortunately, most of it isn't on chain. Some of them that claims they're on chain are not. And so, if you have an extra $100, an extra $1,000 today, you're stuck with what you can do with it, right? There's runaway printing of inflation, and you don't really have what to do with it. You put it into a savings account. Even one of our team members at Mavryk was like, "Oh yeah, well I save a lot of my money also." And I was like, "Well, you don't just save, put money aside and invest it." But traditional way, in the traditional sense of how it works. You've got public equities, so the stock market, New York Stock Exchange, etc., where you can buy stocks. But those stocks are overly inflated because of inflation is driving the value of the dollar down. So you need more dollars to buy more stocks, which means, just higher prices. And then you've got real estate. So that real estate is actually been driven up as well, over regulation, no building permits, and it's turning into investments. And so one of the other issues there is that what ends up happening is real estate has become overinflated. And so if you don't have 20% to put down on a home, then you can only invest in stocks, and that market is also wild. And so if you're not uber rich, your investment options are limited to those two markets. And if you're going to put money away, you might put it into a CD, you might put it into a savings account at your bank, and you're extraordinarily limited. And you're just putting away money that's earning less than the inflation rate, and you're effectively being diluted every single year. So the way that equities will transform traditional assets or tokenized and traded, I think that this is more of like there's a lot of different angles to way you can answer this question, but the most interesting thing is that you can put your savings away into quality assets that not only go up in value every year, but they also pay you on their own, on their own schedules, and that I think is the most interesting thing. Will Mavryk integrate AI or other emerging tech? I'd like to see any blockchain integrate AI at this point. I think there's not a lot of overlap between blockchain and AI, and everyone thinks there is. I really want to see. I mean, it will require its own chain. We've in these little private group chats we talk about, proof of work systems if they're still needed, etc. With Bitcoin, that's one thing, but with other proof of work beyond Bitcoin, that's another. I want to see a blockchain platform that utilizes the proof of work and all the compute that's done there to do one of two things. One, effectively be the compute for AI, and two, effectively it's proof of work and blockchain with Bitcoin. But it'd be really cool to actually have the compute that's being used to secure a chain be used for something as useful as AI. But we still haven't seen that on any system that's come out. I know Near's got an AI narrative. I kind of, disclaimer, I guess I have a bunch of Near, but on a personal level. But we've yet to see it play out, and so I'm excited to see it, but I'm not holding my breath.
I think we'll do 3 more questions, and then we'll end the live.
Man,
you're doing well.
I'm getting punched here. Yeah. With the $10 billion MAG deal, what real world impact should users expect in the first 6 months to 1 year? Man, I wanted to play this one off really funny. The real world impact, look, the real world impact of it is that you'll have access to assets that you've never had before. And that's the most interesting thing about it. So unless you're going out there to buy an entire apartment for $300,000 or $1 million out here in Dubai, you'll be able to access that with $50. And that's like the most real world impact you should see, is that people across, 150 to 170 countries finally have access to investments that they simply never had before. So as we get along as we get more and more tokenization, you're going to see more and more people having diversified portfolios where they just need to open up their wallet and they're like, oh, cool, I got another payment. And then you start to think to yourself, well, this is actually a better form of UBI. And then you start to think to yourself, well, maybe we don't need UBI. We just need people to have more tokenized assets on chain, and then we can have pockets of portfolios and then more and more things coming. So as we have billions that come on chain, and a lot of the stuff that's claimed to be on chain today isn't on chain, but as we have, or it's on chain but not tradable, so who cares? As we have more and more tokenized assets that come on chain and are composable with DeFi apps on chain, you're going to see more platforms that launch that facilitate some service for those assets. So like I said, with that ETF minter, or with, who knows, fixed rate loans, dynamically rate loans like we have now, mortgages that come out, all sorts of different financial services, ones we haven't even thought of yet because things are digital and can happen more quickly. So that's the real world impact we'll get to.
I think the key word there is fractional access that we're providing.
Yeah, fractional access. Yeah, but 6 months to 1 year, so I kind of ran with that, but
it was good. It was good. Next question.
Patiently waiting for a
Can I
question.
just tell you a funny question while you're waiting?
Yeah, well,
will there be a faucet on mainnet?
It's funny you laugh at that, but in the early days of blockchains, in order to get people to go out and use it, because they're like, how do I get money? How do I go buy it? They didn't really have centralized exchanges this way. They actually had mainnet faucets. There was a website that gave away free Bitcoin. I think it was like 5 Bitcoin per person or something. I can't remember who ran it. Was it Charlie Schrum? Someone ran it. And anyways, because it wasn't worth anything back then, right? It was minuscule, pennies. So, and then other blockchains, even the one that I worked for, had a mainnet faucet where you can actually go and get mainnet tokens because it was early days, right? No, we won't have a mainnet faucet. We've kind of advanced in the industry over the last 15 years.
15,
yeah. Yeah, 15 years. Yeah. But there will be ways to earn tokens on mainnet. Okay. Can I truly purchase a home just the way we did on testnet? You will be. You will be able to do so, and even more than that, you'll be able to borrow against it, and even more than that, down the line, you'll be able to borrow money to go buy more. So not just buying $100 and then borrowing $50 against it. You'll be able to put in $100 or let's say $200 and buy $1,000 worth. So yes, you will actually be able to purchase a home on mainnet as we roll out the different platforms on top of mainnet. Mavryk's governance model is unique with the Treasury current council. How much decision-making power is truly in the community's hands? This is I'm actually happy you dove into this, because it's the most exciting things for me to talk about is this. We need to have checks and balances in decentralized systems and in centralized systems. When it comes to the Treasury Council, we're going to have a whole article and blog post about this, so we can dive into the details. I'll give you the high level. But the Treasury Council is elected every 12 months on chain by, you know what, maybe I can actually pull this up on one of the websites and show you. It's actually really interesting. Let's share my screen. Share screen. This one. There we go. So, I mean, there's obviously an interface here so that you can see who are the signers, how much, what assets there are, where the revenue's coming from block rewards, public goods income, transaction fees, Genesis allocation. And when you scroll down here, and this is what really we wanted to talk about here, is this is the inflows of revenue coming into the protocol treasury and governance, which is the heart of your question. So the validators on chain elect every 12 months a 7-seat treasury council. I'll get to that in a second. Hide it for a moment. And that 7-seat council also requires checks and balances. It can be abused if formed and created in the wrong way. So what we did is that we decided, okay, and the Treasury Council, just in terms of that, they are in charge of some different smart contract entry points on the protocol treasury in terms of, like, you know, distributing funds. Off the top of, we'll publish a blog post on this, and we'll give you, obviously make that all transparent. It'll all be open source as well, so you don't have to worry about that. But most importantly, in terms of the breakdown of the Treasury Council, so I like to think of it as having 4 external members of the council and 3 internal members of the council. So you've got 2 ecosystem members, so that could be anyone at, you know, Mavryk Labs Dynamics Foundation. It could be people that work for dApps or platforms or applications that build on top of Mavryk. Because we have that close connection, it's a degree, only 1 degree of separation across from the team. So we consider them ecosystem members. There's also a seat for myself as the founder, but that seat is actually what I like to call a wild card. It is not hard coded. The ecosystem member seats are whitelisted to ecosystem members those are the ones eligible to get on. The founder seat is a wild card. There is no whitelist whatsoever, and it is exactly the same as the open seats for the community. So those 2 open seats for the community have no a whitelist on them. I think there's actually a blacklist on them. So if you're from just a logistics standpoint, if you're running a validator, you can't run for that seat. If you're running if you're part of, I mean, you could use a different wallet theoretically, but if you're on the whitelist for the ecosystem members or whitelist for the validators, then you can't use that same wallet to run for the open seats. But those open seats are open to anybody in the community, anywhere around the world. And again, they're elected by the validators. The founder seat has the same on-chain parameters as the open seat. And the reason why it's done like that is so that if you guys aren't happy with me, or if I want to step down for any reason, I can actually abdicate my responsibility there or my power there, and it goes out to the community. And then, of course, the validator seats are whitelisted. If you only validators can run for being part of the Treasury Council for those 2 seats. Sorry, and so it's 4 to 3. So it's 2 validator seats, 2 open community seats on the 4 side on the public, and then it's 3 seats on the internal, being the founder and the 2 ecosystem member seats. But again, the founder seat is open like the community seats, and anybody can run against me and vote me out. So that is how we balance that power between not only between the Protocol Treasury Council and the validators, but also between the council itself. There needs to be checks and balances. And so we have that incorporated as well. Last question, how will Mavryk balance growth between DeFi, retail DeFi users and institutional partners? It's a great question. Retail users are completely on chain. It's the community. It's people that are actively involved. The institutional partners are more of like the BD relationships that we have for A, bringing on board assets into tokenization, B, distributing those assets in tokenization, and C, also having institutional partners come on board and buy them, right? You don't sell, it's going to be hard to scale $10 billion of RWA sales at $50 at a time. And that's why we need institutional partners there. On the flip side, we've got retail and DeFi users as well who can pop in and purchase assets just the same way everybody else can. And everybody's got the same access to DeFi platforms that the institutional partners have. And they also have access to the same loans and the same home equity lines of credit loans, which is the current way they're functioning, HELOCs in the TradFi way of saying it, or vaults in the DGen way of saying it. And then there's also mortgages that'll be coming out, and everybody can access those. So guys, it's been a big thank you to everyone and all the Mavericks who have showed up. Honestly, let's go. The Mavryk TGE is launching on MEXC on September 18th at 1 p.m. UTC. I will have to figure out what time that is in Dubai. 5 p.m. in Dubai. And so that's the morning in the US and the early afternoon in Europe and early and evening time in Asia. So get ready, get excited, get ready. There's a lot to say. It's been a lot of time building, but quite honestly, you can start getting ready to run validators. You can start getting ready to start staking or co-staking or delegating. And to everyone, make sure to follow us on Twitter and Telegram. If you haven't already, stay safe in the trenches, because pretty soon we're going to be start delivering value to the trenches and not just hopium. And so, like I say, think different, be Maverick.